Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be going through some of the main things that I'm focusing on between where we are now, which is over here, and where we want to get to, either here or there. So I'm going to share with you today exactly the main things that I'm focused on in order to make this journey, wherever that's going to be, towards the end of the bull market, to help us on this journey from where we are to where we want to get to. So the kinds of things I'm going to be focused on in this video is the monthly time frame to see what the Bitcoin price is telling us, as well as look at the weekly time frame and what the most important thing is from which to elicit the information, as well as look at the 60-day cycles, and also why I'm focused on the two targets which are going to give us a clue as to how Bitcoin is going to move forward. And obviously I'll cover the wider markets as per usual to give us the overall flavor of what's going on around Bitcoin. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so what narrative can we paint with what the information is telling us in the Bitcoin price and the wider markets? So I'm going to start off this time, instead of the wider markets, I'm going to start off with Bitcoin because there are a few things that I'm wanting to just focus on without getting distracted. And I do respect the fact that we can get distracted very easily with Bitcoin because there is just so much going on, and with so many people doing different types of analysis on the wider YouTube community, that it really is very easy for people to get distracted. Okay, so when we look at the monthly time frame, we have a very interesting pattern developing here. So we have the previous double top of the last cycle here at around about the 69,000. We had some sort of a fake out breakout here, which didn't follow through as we would have expected from a breakout of a neckline like this. And instead what we've got is a consolidation range at this point. But this consolidation range isn't a normal type of consolidation, because what we've got here on the wider picture is that you've got a cup and handle pattern here. And you can see the lows of these candles are making lower lows along the way. So you know that this pattern is a cup and handle. So if we look at the Bulkowski cup and handle pattern here, what it's really telling us is that with this particular pattern, the overall performance rank is 3 out of 39. So it's one of the more stronger patterns out there. One is obviously best. And the failure to break out from that is only 5%. Remember, this is a game of probabilities. So 5% chance that this will fail. And the percentage meeting the price target is 61%. So when we measure this, from there to there, when we take the measure from the bottom to that neckline and we move this over here, then this meeting the target, this target here, 61% of the time we should meet this target from the bottom to the top of the neckline. So what Bulkowski is saying is that if you take the measure from the bottom here to the neckline, around about the 69,000, that gives you a 351% move that was from the bottom to that neckline. And if you take that 351% from the breakout of that 69,000, that takes the price to around about the $320,000 mark. So the probability of that meeting that price, so which means on the reverse side of that, there's a 40% chance it doesn't go to that price. So always remember, get that balance right, always. Probabilities, not certainties, no guarantees. But the more important thing here is not the actual price target here. The more important thing is that this particular pattern is telling us we're still in the bull market, and this pattern here with this handle on this cup at the moment is showing us that we are actually in the bullish phase of the market, and we're waiting for the final parabolic move somewhere around here. And apart from the fact that we're in this cup and handle pattern here, when we look at the stochastic RSI, and as per the title of this video, are we in a new buying opportunity? Well, this would suggest, again, just like this is here, the cup and handle pattern, suggesting that this is a buying opportunity at this point for the market to go much higher. Well, the stochastic RSI is showing us here quite clearly, we've just done a double bottom below the 20 line, and the green line here, as you can see, if I make this a little bit bigger, you can see that the green line here has now protruded above the 20 line. So once again, just like on the monthly time frame with the cup and handle pattern, the stochastic RSI is also telling us that this is now a bullish phase, and we are in a new buying opportunity for those who see this as an opportunity. And the question sometimes people ask is that at what point do you know when we are in a bear market? So if we go back to the monthly chart time frame, and this is something I showed you in I think the last video, showing the 8 EMA on the monthly time frame. And the blue line here you can see meandering through the price from the first cycle to this current price action here. What we've seen historically is that once you get past the halving and past the previous all-time high, the price of Bitcoin doesn't fall below the blue line until it's actually topped out. And it's only when we get the price falling below the blue line here that we know and confirm that we're in a bear market. And similarly here, previous high, after the halving here, the blue line kept the price above it until it fell here, and we were in a bear market. Similarly, in the last cycle, the first stop was 64,000. The price didn't fall below the 8 here after the halving, breaking above the previous all-time high. And on the second, and on the double top, we did get a break below that here. So this was again Bitcoin trying to throw a curveball, which it does from time to time. But once we topped out at the 69,000 and fell below the 8 EMA, that's when we were in the bear market. So if we just have a quick look here, because we're currently now just after the halving, and we did break the previous all-time high at 69,000. So having a close look at exactly where we are, this is the current monthly candle here. If this closes like this, with a big long wick at the bottom and a very small body here, if this closed on the 31st of July, this would be a very strong signal, maybe 60 to 70% probability that we're going to have a big massive move to the upside should we close like this. But obviously we've got another 2 more weeks to go yet. And as you can see with the wick below the 8 EMA, people were getting worried at this point. But as I pointed out in last week's video, if we closed below this 8 EMA, this is what we've got to always be aware of. The reference point is, if we closed here, then there is a good probability that we may well have topped out here. But until that happens, we are in this trend, and the trend is always your friend until the end. And that would be the end of that trend there. Okay, so apart from these things, what am I also focused on? Well, there are 2 targets that are always in my mind currently at the moment. And I'm really looking at these as signals for the start of the parabolic phase of the bull market. And I've shown you these before, and they're still relevant now because we haven't actually broken above them yet. So the first target, if we move to the daily time frame and we put on the pi cycle, which is the red and the green line here, and many people still ask about the actual settings for this indicator of the pi cycle. So the pi cycle I'm using is this one here, pi cycle Bitcoin top indicator by Bilzerian candle, and the settings for that one and the inputs on this one is the long moving average is the 350 simple moving average, that's the red line. And the short moving average, the faster line, the green one, is the 111 simple moving average. And the 2 targets that I'm looking at, and they're based on what's happened with the cycles in the past here. So the first target is based on the halving. So when you get the halving, you look at the previous top, like this one here, and you put a horizontal ray across that top. So when we break that top, that is your first signal. Yes, it can go a little bit below it and what have you, but this is overall an incredible signal that the Bitcoin price is getting ready for this big parabolic move to the upside towards the end of the bull market. So that's your first signal. Don't get worried about that. If the price goes above this and then falls a little bit below, that's just the market trying to shake you out before this big move here. What confirms this here is that when the price then moves above the red line of the pi cycle, that's your second confirmation. This is your signal that we've moved from this accumulation phase and into the parabolic phase. That's the transition that's taking place with those 2 targets. And if we move to the second cycle here, same thing one more time, the halving here, and the previous high was at this point there. So you put a ray across there, and as you can see, once we got above it at this point, like I say, don't get worried if it just falls below it. That's just a way for the market to shake you out. Look at the way it was trying to shake you out here. Took you all the way up there on the scenic journey that Bitcoin normally does, and then it dumps on you here, and most people would have got shaken out at this point expecting lower prices, but then look what happens. It goes all the way back towards the red line. So this was really the time to get in, as you would see from the historical perspective now. But once we got above the red line, that was your proper confirmation that we'd broken out of this consolidation range here. And we were on to the parabolic phase one more time. And moving on to the third cycle, once again, we got the halving here. The previous high was at the 10,000, 10,500 here. And if we put the pi cycle on, you can see that once we broke this neckline, at this point, the market went above that and then came back to try and shake people out. So that's the second time it did that, having broken this neckline, and it was retesting the green line here. But this was really the signal that we're about to get out of this consolidation range that we got ourselves in. So when you look back in history, you realize that this was an incredible time to buy around here when the price went above the neckline. And because this was followed by this here, the parabolic phase. And you can see one more time, the red line is where this is a confirmation. So if you want to play safe, you wait for the red line, but then you miss out on this big move from the neckline here. So at this point, you would have missed on a 100% move, but your probability from this point onwards was much higher here. So moving on to the current cycle, exactly the same thing's happening one more time. We went through the halving here on the 19th of April. The previous high is this point here, which is at 73,800. So what I'm waiting for the start of the parabolic move is when the price starts to move at the 73,800. So once we clear that on the closing of a daily candle, yes, it may go up a little bit and then come back down in order to shake people out. So you've got to be always aware of that. But if you're taking a 6 to 12 month view or 12 to 18 month view, this isn't going to matter whether you get in below the line or just above the line. And look where the red line is of the pi cycle. That's moving in this direction. So this will be your first signal, the first target of the start of the parabolic move, and the price moving above the red line is going to confirm that. And then this will be the signal to ride wherever this is going to be. Please don't get worried about the end target here. It doesn't matter whether it's going to go to 100,000, 200,000, 300,000, 400,000. Let the market do what it wants to do. The main focus of people who are trying to get in at the bottom and trying to get out at the top, the main thing, the main consideration is to wait for the Brexit indicators, i.e. when the market is telling us with a confluence of indicators, which I've shown you, when the exit indicators are signaling that we're topping the market. If that is at 100 or 200 or 300 or 400, wherever it's going to be, that'll be the time to get out. The most important thing is to know when to get out rather than be fixated on a price up here. And I've mentioned this many times before, but people seem to have a fixation of the end price. That's not the most important thing. So there you have it. In conclusion with this, are we in a buying opportunity? And for me, I can only share with you what my thoughts are. I'm always accumulating in the Bitcoin miners whenever we get these dips. And if they're an unexpected dip like this, then I'll try and find some money to buy more. Because I know that once we get over here, wherever that's going to be, this will prove to be a very opportune time to get in. And sometimes people ask a very strange question: how are you buying down here when you're already fully allocated or 100% invested? I'm completely at a loss when people ask that question, because like most people, we all have a monthly income in what we do. So if you've got a monthly income, for argument's sake, if you're getting $5,000 a month in your income, and every month you can save maybe 1,000 out of that, then while you're fully invested in the market like I am, if I've got $1,000 at the end of the month from my income, then I can start nibbling away and add to my allocation here. So at any one point, I'm always 100% invested with what I've got. And if I come into more money, then I'll invest a little bit more. So just because you're 100% invested doesn't mean that you can't buy at the dips. And this is the strategy that I've had all the way from here. Whenever we've had the dips, I've been buying the Bitcoin miners. So while everybody's expecting at these points for the price to go down, if you're buying at the dips, the dip might not be right at the bottom. It could be up here, or it could be up here. But when you look at the overall picture, this price here would have been incredible now when you look back at this price action. So whenever I have any spare cash and there is a dip along the way, then that's the opportunity time to get in. And I've done a few videos when we got to this point here and we were falling down at these points. So these are still higher than these points, so we went even lower than that. But certainly I was trying to convey the message when you've got this type of consolidation here, that these may well be your last chance to buy Bitcoin. Because when we get up here, wherever this is going to be, when you look back at this point, then this may well be the last opportunity. The last opportunity doesn't mean that if you don't buy at this point, the price is going to do that and you're going to get left behind. So it all depends on how you process the information that you get. And sometimes people only hear what they want to hear. They're not really understanding or listening to what the message is. The last opportunity here could be buying here or here or here or here. These are all but last buying opportunities because we're in this consolidation here. So no matter what price you buy, either at 53,000 here or 70,000 here, when you get to the end price, wherever this is going to be, this will look like a real bargain within that range. So this becomes the last buying opportunity. And that's why we're asking this question, is this a new buying opportunity? Well, for those people who can see the bigger picture and have a 6 to 12 month view of the market, this may well be a new buying opportunity. So let's have a look at the 60-day cycle. Okay, so last week, I marked this down as a day 65 low here with this long wick at the bottom on Friday the 7th of July. So that was the last bottom. And to confirm this bottom, we have two targets here. And that is that we've got the two gravestone doji candles here, or shooting stars, whatever you want to call them, with the long wicks at the top, and they're at 59,500. So that's the first sign to say that this is a confirmation of the cycle bottom here, of the 60-day cycle. And the second target, which would actually confirm this without doubt, would be the top of this candle here. And that is at 63,794. So call it 64,000. Once we clear 64,000 here, that would be your signal that we've now bottomed out at this point, and we're going into this mid-cycle high, and we then have to move these red lines to that point of the day 65, and this then goes to the 4th of August here. We've then got a run into the midpoint of the 60-day cycle, and normally, like you see with these, you always get some sort of a low into the midpoint before we recover and go much higher. And you can see this over here as well. So you'd expect one of these and then a move back into the 60-day cycle high and then a low down here as well. So this is what you would be expecting at this point. And because we're moving from quite a low point here, it doesn't look with a high probability that we're going to clear this 73,800 level within this one cycle, unless we have a big move. Of course, that's obviously possible, but the probability would tell you that somewhere along the line we're going to get some sort of a correction and maybe come down into the 60-day cycle low down here before we go into the next cycle. So it's the next cycle that I would be thinking that we may have a good chance, a good opportunity, a good probability to break their 73,800 top, and that would meet our first target of getting above the previous high, i.e. 73,800. That would be the first confirmation that we're in a parabolic move, and then the second confirmation would be to go above the red line of the pi cycle. So it looks with a good probability now that we've now bottomed out on day 65 of this cycle. We're moving into the midpoint, which is around about the 4th of August. So the end of the cycle is going to move a little bit to the right here, to the 3rd of September. So this is where we'd expect around about that time period to start a new cycle, which would then probably take us above the 73,800. So once again, the price action around here would suggest that we're in a new buying opportunity, having had a look at the previous analysis. And if we have a look at the wider markets, you can see quite clearly here that the smart investors were snapping up all these prices for Bitcoin. So as per this title here, $4.3 billion of Bitcoin was being snapped up by the whales. So while everybody's expecting lower prices, getting worried, and many people thinking we've gone back into the bear market, you see the smart movers always buy up at these dips. And as I mentioned to you in the last couple of videos, that we had Germany selling a lot of their Bitcoins, and we really didn't know how much of that they were going to sell. So it now appears that the Germans have actually now run out of Bitcoin to sell. So all their Bitcoins have now been sold. And if you ever needed a contrarian signal to what you should do in the market, always look at a government, what it's doing. If a government is buying gold or silver or any of the commodities or buying Bitcoin, that may well be a signal to get out of the market. And vice versa, if they're selling their Bitcoins, it usually means that it's a bottom signal here. And why do I say that? Well, I live in the UK. And I remember back in 1999, we had our Chancellor, Gordon Brown, and between 1999 and 2002, he was selling off the UK's gold reserves in a series of auctions. And if you look at the charts between 1999 and 2002 for gold, and you would think that he would have access to the top analysts who'd be giving him some good advice. But time and time again, whenever a government does this kind of buying and selling, it's usually completely at the wrong time. This is a time period where the Chancellor of the Exchequer, Mr. Gordon Brown in the UK, was selling all the gold. And if he had any proper analysts, they would have been looking at this. This is the top of the market. And what he's done is sell right at the bottom of the bear market here. This is what the governments do. It's not their money, it's the public money, and they're very good at squandering that money. And look what happened after this. So this is 1999 to 2002, and look what happened afterwards. That was the beginning of the bull market, right at that point. So if that is something to go by, what the Germans are doing is completely the wrong thing. And history will prove that what they've just done is to actually sell completely at the wrong time before we get into the parabolic phase of the bull market. And if we have a look at the liquidity heat map here, the two yellow zones that we've got are at this point here, just above the $62,000 and just above the $63,000 here. So this seems to be the range that the price is in. But if I show you the CME futures gap, which is now developing, it does give us a good probability that we may have to come back down to these levels down here. So this is the Friday close that we had here. The top of that was 58,790. And we know that this has a habit of coming back and closing these gaps. And this is the gap that we've got now from where we started the Monday's candle at 60,845. So to close this, we have to come back to around about 58,790. So something to be mindful of this gap here. So we may go all the way up here about to 70,000, come back for the final shakeout down here, and then the parabolic move starts. And something incredibly bullish going on with the ETFs. If we have a look at the inflows and outflows over the last 7 days, there's been a remarkable inflow into these ETFs. So you've got IBIT here, the BlackRock ETF, and we've got well over 9,000 Bitcoins coming in, while Grayscale, which has been bleeding the Bitcoin over the last many months now, since January, they're well behind in their outflows of 1,587. But you can see there's a lot of green down here. So a lot of inflows, and the outflows aren't very high at this moment. So this is one of the reasons why the market has just suddenly started moving up, because the German selling has now gone out of the system, and BlackRock seems to be the one that's buying up a lot of the extra Bitcoins there. And we obviously have the Mt. Gox situation in the background as well. And once these are all out of the way, you can see that the parabolic move is getting closer. Okay, moving on to the wider markets, looking at the dollar, and we drew this symmetrical triangle. So I've been showing you this now for the many last videos, and the price was coming up to this neckline here. So this was giving us a high probability move back down to the support line down here. And what I mentioned in the last video was that this is the point where it has to make up its mind which way it wants to go. Because it was coming to the fourth test, there was a good probability for this to fall down. And this is exactly what's happened now. It's fallen down below this. The target down here would be with the measured move of this symmetrical triangle. So if you measure this from the top to the bottom here, so that's just over a 5% fall from the breakout. So this would suggest that the dollar is on its way down, however long it's going to take. So the target here is about 99 from the current 104. So this would now again suggest that we are in a new buying opportunity with Bitcoin and the Bitcoin miners. And if this was to happen, this fall down here, then this would give a very good trigger for the wider markets to move higher. Of course, it can come back and retest this level one more time before we go down. And if it recaptures it, then this is not very good news for the wider markets. But we are expecting interest rates to be cut sometime during the year, which would suggest that the dollar is going to come back down. And if we had a look at the SPX on the weekly time frame, and what we seem to be seeing is some sort of a 1-to-1 extension from here to up there. So if you were to extrapolate that 1-to-1 extension, it would take you to around about 63, 6400. So this is looking incredibly bullish. And if we have a look at the 60-day cycle on the SPX, this particular move, which we had now, a big move to the upside, we're coming up to the 60-day cycle end now. So we're in this time period where you would expect some sort of a flush down, just like we got at the bottom here of the last 60-day cycle. And what we've got is a right translated cycle that we made in this current cycle that we've got. So move down into the 60-day cycle low, perhaps to the tops of those candles there, or at the bottom, this range here. If we can fall back into this range, then that would start a new cycle to the upside. And as we've seen with the dollar, if that falls, the SPX is going to move much higher. And moving on to gold, on the daily time frame, we can see quite clearly we've made these targets here, the 61.8, and nowhere did it actually come back down to these levels. And what we've really got now is this range here at the top and the bottom. So we've tested it a number of times, and we're coming back up to that level one more time there, and we've tested it at the bottom and it hasn't fallen through. So we do have a good probability that it may break up at this point. So overall, this is looking incredibly bullish. Having broken above this neckline, we seem to be consolidating in this bull flag here, which is a continuation pattern to the upside. So this is the weekly time frame here, showing quite clearly the bull flag, and we've gone above this gravestone doji candle here, or shooting star, whatever you want to call it. And this long wick at the bottom is telling you that there is a lot of demand buying up at these points. So will this momentum carry it up? If you look at this stochastic RSI, you see the momentum is to the upside, and there's still room here for the RSI to go higher. Very similar with silver as well. As you can see with the stochastic RSI moving up, the price didn't fall back to the 61.8, and it's now moving much higher, creating this bull flag at this point, and we're consolidating at a higher level here. So this range is where it needs to break above, and once again we've got this bull flag, a move to the upside as a continuation pattern. So it's all looking good for gold and silver. I just want to address one question I do get asked from time to time, and that is, why do I do the Bitcoin analysis when I don't have any Bitcoins and have no intention of buying Bitcoin? And that's a valid question, and the real answer really lies here, because what we're covering here is one of the areas of this wheel of life that I show you from time to time. So for me, I'm always working on my goals and objectives, and that's the key word, goals. So what I have every week, every month, every year, every 5 years, every 10 years. So what I have set, I have weekly goals, I have monthly goals, I have yearly goals, and then the larger time frames, I have my 5-year and 10-year goals. So I have those goals in this finance area, in my personal growth, in my health and fitness, with my family, my relationships, my social life, but especially in this thing called attitude. This is what's going to determine how far you go in this bull market. And if you do personal development, i.e. you're the type of person who works on your career, you work on your finance, all these areas here, if you're the type of person who works on these on a regular basis, you're more likely to achieve your goals, your dreams, your vision, and meet the targets that you set yourself. But in the absence of that, if you don't have any goals, if you don't have any targets, then whatever dreams and vision that you have are much less likely to be met. And it's the old quotation that if you aim for the stars, you might hit the moon. But if you don't even aim for the stars, you're not even going to hit the moon. So what I have is, in my financial side of things, I have my goals. So I just want to share what my goals are, which will give you an idea why I do the Bitcoin analysis. So with the Bitcoin miners, I set a goal at the beginning of 2023 with a starting capital here of around $100,000. I set a target of $1 million. And by the end of that year, i.e. at the end of 2023, in the Bitcoin miners portfolio, we achieved $434,989. So we took that amount of money, and we're now using this as part of the 2024 goals. We've now grown from that 434,000 to 560,000. So this is our current trading portfolio. And we say trading portfolio because we do trades called the ratio trades. In other words, And you may have heard of these by another name called pairs trading. But our target for the end of the bull market is $5 million based on a 10x from where we are currently at the 560,000. And people want to know the figures for the success of the ratio trades. Since the beginning of 2024, these are our results of the trading portfolio here. So these are the completed ratio trades that we've got so far. Currently, we've got 2 ratio trades ongoing. So we're just waiting for them to complete, and hopefully we'll get quite a nice profit on those 2 as well. So to answer the question about the Bitcoin analysis, I do the Bitcoin analysis because that feeds into our decision making for the ratio trades as well as running the portfolios that we have. And we have many members who don't do these ratio trades, but what they have is a passive portfolio. And we're running this passive portfolio alongside our trading portfolio with the same amount of money to see how the passive portfolio will actually perform against our trading portfolio. So we have the same target, 5 million at the end of the bull market, and currently that's at 469,000. So that's about 100,000 less than the trading portfolio. Obviously with trading comes a little bit of a risk, but those who've been following the ratio trades will tell you that there is really a minimum of risk because at no point are you actually carrying cash. We are always fully invested in the Bitcoin miners, and the reason why there isn't a risk with the ratio trades as you would normally get with normal trading is that the ratio trades are really identifying opportunities based on historical patterns between 2 miners. So what we're doing is moving from one miner to the other, so at any one time you're always fully invested. For instance, these are the historical patterns between 2 miners, Marathon and CleanSpark. So you can see that they move against each other on a relative basis very frequently, and these give you incredible opportunities to buy and sell at the highs and the lows. And currently we're in this particular pattern here. So we've been moving from CleanSpark to Marathon here, then from Marathon to CleanSpark, back from CleanSpark to Marathon. So this is one of our trades currently here, having moved from Marathon back to CleanSpark, expecting a move to the downside. And even if this breaks up, it really doesn't matter because this is a relative breakout. So Marathon will perform better against CleanSpark here, but because you're not out of the CleanSpark, you will still go up. The only difference is they're at different rates to each other. And if you want to join us on our journey with the Bitcoin miners, all you have to do is below all of my videos, you can see there's a join button here, but also in the description box, there's also another join button here where you get the spreadsheets with all the information of the miners that we're currently investing in and all our trades, etc. So you'll get all the spreadsheets here. So if you want to join, either click this button here or this one here, and for the price of a coffee per week or a Snickers bar per day, you will have access to the membership tab here where everything happens in terms of the market updates, which I do every single day, Monday to Friday, and I leave a lot of articles on Bitcoin and the Bitcoin miners to keep on top of exactly what we're doing on our journey to the top of the bull market. So all the videos for the members you'll find are here with a members only tab. So apart from the daily updates and the 2 videos we do Wednesday and Friday, where we cover Bitcoin and the Bitcoin miners, as well as look at the ratio trade opportunities. Okay, so I'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comment section. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.